Today we're going to talk about the dividend investing strategy, the pros, cons, and whether I think it's a good strategy to use. First of all, we need to ask, what is a dividend? In simple terms, a dividend is where a company pays some of its profits back to its shareholders as a thank you for investing their hard-earned capital with them. Dividends can be paid out in the form of cash or in the form of additional stock. This is usually done on a quarterly basis, so most companies will pay a dividend 4 times per year. So that sounds great, but what are the things we need to look out for when investing in dividend-paying companies? The two ways a dividend investor will make money is through stock value appreciation. This tends to be a little bit slower with dividend-paying companies as they're not in their high growth phase anymore. They're not investing all of their capital back into the company as they're paying dividends. And another way is through their dividend payment increasing year over year. A common mistake dividend investors make is focusing too much on the dividend yield of a company while ignoring the actual share price appreciation over time. If we look at AT&T, for example, they were trading at $61 a share back in 1983, and they've actually been going in a downward sort of sideways trend ever since, currently at $29.62. But if you look at their dividend yield, it's one of the highest, sitting at 7.02%. If we compare this to Coca-Cola, you'll see that they've been going in a constant upward trend over time, whereas their dividend yield is half that of AT&T's. So what are the companies that are growing and paying a really good dividend? So on this, I can't stress the importance enough of doing your own research, but I will give you a couple of ones to consider. There's Coca-Cola with a dividend yield of 3.31%. There's McDonald's with a dividend yield of 2.49%. IBM with a yield of 5.31%. And AbbVie with a yield of 4.87%. So I've got paid my lovely dividends. Now, what should I actually do with them? Well, you've got two options here. You can either spend it or reinvest it back into the market. So we're just going to use an online calculator just to illustrate the difference between reinvesting your dividends and taking them out straight away as cash profit. So for this example, we're just going to get 100 shares at $100 a share, annual dividend paid $5, the dividend growth rate at 5%, and the stock growth rate annual at 5%, and we're going to do it over a 10-year period. So if we calculate this, we'll see our total value at the end of the 10-year term is going to be $26,500 if we reinvest our dividend, whereas if you compare this to not reinvesting your dividend, you're sitting at $22,800. So there's a significant difference there. You'll see we have 163 shares nearly, as we're buying back more shares with our dividends over time. And here you'll see we just still have our 100 shares as we haven't added to it over the 10-year period. The dividends paid over the time period, 8,468 if we've reinvested our dividends, and 6,600 if we haven't. So about a $2,000 difference there as well, which is very significant. And our annualized return percentage, 10.25% versus 8.63%. So you can really see the power of reinvesting your dividends and compounding over a long period of time. Are dividends subject to tax? The answer to this is yes. Dividends are considered another form of income, therefore they're taxable as part of your entire income. So just for example, if you've got a really well diversified dividend paying portfolio of 30 different stocks, each paying a quarterly dividend, then you will have 120 different transactions that you need to account for at the end of your tax year return. Thankfully, most brokers will have an option in their site or program to be able to see your total amount of dividends and your realized profit and loss breakdown. The app I use is called Trading 212, and I'll leave a referral link in the description if you want to check it out. Just to recap on some of the pros and cons of dividend investing. So some of the pros: it's a passive form of income. You're getting money every quarter without having to do any sort of work for it. You get two income sources, as you get money from the capital appreciation of the actual stock value and the dividend itself. You're usually investing in well-established companies who have been around a long time, which gives an element of security to it, and you get to reinvest that dividend over time for a greater return. So some of the cons just to consider is these companies, sort of companies that pay dividends, will tend to be slower growth companies as they've got to a level of maturity where they're using their cash and some of their profits to pay back to investors rather than reinvesting to grow further. Another thing is it can be difficult to keep track of tax, as we discussed earlier, as you're getting regular payments from a load of different companies. Another thing to consider is if there ever was a scenario where the dividend had to be cut to save costs, then that will massively affect the stock price, as a lot of investors who are invested in that company will be doing so for the dividend. So if there ever was a scenario where the dividend was cut, you could actually see a very sharp dive in the stock price. Also, I find that dividend investing, you still need to take a bit more of an active approach than, let's say, if you compared it to investing in ETFs, as you still need to keep in mind the fundamentals of the business. You need to keep up to date with market news and market trends, as even well-established companies can be hit hard. You've seen in 2020 with the pandemic, some companies had to stop their dividends entirely or cut them. So I really like the dividend investing strategy. It's not a strategy I'm using right now, but definitely one that I'll use in the future. So two guys I have up on the screen right now, Paul Briscoe and Ben Page Investing. These are two guys who know a lot more about dividend investing than I do, so I thoroughly recommend you checking those guys out. With that being said, guys, I'd really appreciate it if you subscribe to the channel. We've got nearly 160 subscribers now, which is absolutely insane. And I've got loads more content on saving money, budgeting, investing, personal finance and taxes. So check out my other videos if you haven't seen them already. Thanks a million for watching, and I'll see you in the next one.